Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on JP Chase, ticker JPM. Now why are we doing analysis on this today? Well, we can see it closed up around 1% on the day. And as we did see, the majority of the market overall get a strong bounce today, wiping out most of the losses for the past week. Thought it'd be a good idea to maybe do a analysis on JPM because the markets are going to continue down. We do prefer kind of defense stocks or just stocks where fundamentals are quite strong. Obviously you've got the tech stocks which usually provide better upside, but if the market's continuing down, they're going to be hit a lot harder than some stronger stocks such as JPM, and this is one of the stocks I love to be trading when the markets are pulling back because there's still great upside to it. While you're kind of minimizing your downside risk. So on a risk reward basis, I prefer stocks like JP, Goldman Sachs, and usually ones that you have better kind of income and less debt compared to like tech stocks. But anyway, to get kind of straight into it, we have made an analysis video in this I think in the past week. And when we were talking about, we had buy targets around $48, and then if it continued down, $42 and $140. Reason for these two targets was, as you can see, it's the third deviation on the 4-hour and the daily. So we knew if it did continue down, this most likely would be the absolute bottom for JP and we would expect a bounce from here. And that is why we started doing debit spreads or bull debit spreads when it came down to these lows, and also starting to buy up some shares. But yeah, overall, that was the kind of level we were looking to do. And if it does push back down to that level, around 140 to 142 is the area we're still looking to enter, because at the end of the day, it's third deviation. So it's very low risk to really be entering around there. And we can see we are coming into the second deviation now at around 148.50. Now this can be used in multiple ways. If you've not got long JP and you're looking to get long, it's still below that level is still considered good because obviously you're below the second deviation, so it's still a relatively low risk long. But if you are already long, that is maybe a signal where you can move your stops and or maybe lock in some profits. But overall, we will be looking for those higher up targets. So 155 to 156 as those are the first deviations. So again, coming into these levels, we're going to be looking to move our stop once again, and again lock in probably some of the profit. But where we're going to look to lock in the majority of profit, and that will be around this 160, 161, because that is our closest statistical mean, and we tend to close out our positions completely once we come into that first statistical mean, because that's where stocks tend to reverse to. So after that, it turns into a bit more of a gamble. And what was a nice thing to start to see is obviously JP Morgan has sold off so heavily, so we are looking for a strong bounce, and we are starting to see kind of implied volatility drop a bit. Also, one thing I did want to point out, as I forgot to at the beginning of the video, is looking at gap fills, because again you can use these as targets along the way. So obviously we have a very big gap fill at 168, so if you're holding past statistical mean, that's an area we would look to lock in profits. 157, so again this range here is definitely something to be keeping an eye on, because we got a 155 target, a 156 and a 157 / 158. So this whole area, we will expect some hesitation and some struggle coming into this area, just because there's so many lines of resistance coming into here that it could be hard for it to break through. And it's one of these cases where we're probably going to be locking in a bit more profit than usual at those first deviations, just because of how heavy resistance is coming into these levels. But apart from that, they're really the main gaps we're going to be looking at. If JP Morgan does continue down for any reason past the third deviation, which is unlikely, but obviously nothing is impossible, we do kind of have a target all the way down to 129.50. Reason for this is we can see this is a gap fill from near enough a year ago. So once we kind of get to the second of this February, these targets may start, well, they will start coming off the yearly chart or the daily chart. So once they come in there, they won't have as much impact, because the majority of retail investors and even some institutions are looking at the daily chart. So the max they're looking at is the past year of trading. So once that gets wiped off, it will probably have still some impact, but just not as strong as if we would hit it in the next few days. But either way, from 142 and below is definitely a low risk long. Where we are now, again, still has great upside. I mean, if you're getting long at 146 as we are now, Your upside to our final target, key target, is still 10%. To our kind of where we expect hesitation, still near enough 6% return. Not only is that on a banking stock, which is good, but a fundamentally strong company. So it's definitely something we are kind of happy to trade. And then obviously you can trade these in different ways to kind of increase your upside. Obviously, if you're out of the US, CFDs, you can leverage your even just do a 2-to-1, then you're going to be getting around 12% to the first one and 20% to the top one. Or you can be using things like debit spreads, credit spreads, or just plain options. But either way, you can increase your potential upside if that was an interest, but obviously doing that may increase your risk. So I hope you enjoyed the breakdown on JP Morgan. Hope to see you next one, and that's it. Peace.
I go dumb for that money, dumb for that money. Profit on top of profit, Donald Trump kind of money, okay.